All right, hello everyone, and welcome to our Altos Trading Live strategy session. This is Richard Van Rich here with Jeff Tompkins, and we got Craig Ward answering questions in the chat. And we're really excited to have you guys with us here this week. We missed you guys. We haven't seen you in a couple of weeks. I haven't seen you in a couple of weeks. I was actually out on our last session too. So really glad to be here and see all our folks out here. And man, it's a great time to do one of these events as usual. If this is your first time on, you'll notice your microphone is muted. That's so we can all hear Jeff and I talk. But there is a Q&A box at the bottom. So if you have any questions throughout the evening, put those in there and we'll get to those throughout tonight. If you have to hop off for any reason, this is recorded and will be available in the members area later tonight and also on YouTube by tomorrow. If you have any questions about your own account, subscriptions, access to Trade Trend, Zillion, anything like that, email support@altostrading.com and we'll get to those tomorrow. So before I bring on Jeff, let me just read a disclaimer. Trading securities and options involves risk. Prior to buying and selling an option, investor must review a copy of characteristics and risks standardized option. Investors need a broker to trade securities and options must meet suitability requirements. Past results are not necessarily indicative of future performance, and performance figures are based on actual trades, including real money results. Due to the time-critical nature of trading, broker fees, and activity other subscribers, there's no guarantee subscribers will mirror our performance, and performance numbers shown are based on trades users could enter based on the trade signals. So that being said, Jeff, we'll go ahead and grab the mic. I'll grab another cough drop.
Yeah, sounds like you're either allergies or cold kicking in, huh?
Yeah, I'm on the backside of the little sinus flu thing. So
Yeah, I got a little congestion myself. I think it's spring allergies, but yeah, welcome everybody. Good to see you all again. Sorry, we had to reschedule this week. I had some travel on Tuesday, so weren't able to make the Tuesday meeting work, but appreciate all your flexibility for our reschedule this week. We'll make it worth your while. So a lot of good things to cover.
So how was that flight? Last time you flew in, it was a nightmare. Did you at least get in?
Yeah.
Pretty
Finally
clean?
had like a seamless travel experience for the first time in like 2 years. No delays. I mean, minor delays, but no more than like 20 minutes. So
yeah. Well, that's good.
Yeah. So things hopefully are improving, but yeah, all went well. So still, I mean, man, the airports are so busy. It's crazy.
Is it still pretty hostile? Like you see, like every day, like we live in Atlanta, so it's like the busiest airport in the world. Every single day, you see like some guy like wigging out, like punching a Southwest guy in the neck for, giving him like one less bag of animal crackers or something. Like people just lose their stuff.
Yeah, I mean, this time, no. It's just some like rude passengers other than that. But yeah, the last trip I took down to Austin to do some recording in our studio, somebody got kicked off our flight. They never said why, but I think he was like refusing to wear his mask or something.
I had one of those last time from when we were flying out of Vegas. This guy was wigging out, trying to wear his mask.
Yeah, so
crazy.
It's like a hefty penalty and all these things. So I don't know. And of course, then you get kicked off the plane.
I think you go on like the no-fly list if you get bumped off, right? You didn't it's like a big deal.
Yeah, maybe, I don't know, but it was nice. So along those lines, like it was great this time. I didn't have to wear a mask, because they've well, at least a lot of the major airlines. I was on United, expired that requirement, so I didn't have to wear one, which was nice because it was a cross-country trip. So 7 hours, on a plane. Nice.
That's
not
rough.
to wear that this time. Yeah,
that's rough.
So yeah. Anyway, so so a lot of good things to cover tonight. I'm just looking at my other monitors. Futures actually gapped down. It might be an earnings thing. I haven't looked at that, but we'll talk a little bit about that. If you guys are Zillion members, I posted a really important commentary last night. If you haven't seen that, take a look. But we'll go over that too, because we're at a key level on the major indices, key reversal level. So far today, that's held and panned out. So we'll look at those on the major indices. Take a look at the VIX, and tonight's going to be more of a ticker roundtable. So we don't have a specific strategy to cover on tonight's session. This is going to be more about you guys and what you want to take a look at, what you're watching, and what you want us to go over on our session tonight in terms of analysis of buy or sell signals or support and resistance levels. Then we'll wrap up with Q&A. So a lot of good stuff. Alrighty, let's go ahead and I'm going to flip my camera off and then get over to our charts. And we'll start with the S&P. So again, I'm going to actually let's look at the commentary, because I'm just going to share on Zillion. Even if you guys aren't Zillion members, we do post commentaries that are relevant to current market conditions. If there's something major to be watching, whether it's a news announcement or a technical level, a buy or sell signal, whatever, this gets posted in here. But even if you aren't a Zillion member, I'll go ahead and share with you what I posted last night, because it was obviously very relevant, timely, and so far has been panning out. And we'll map this on the chart here in a second. But what I highlighted was the fact that in the midst of this fairly major earnings week that we're in, we have approached major support levels on the major indices, the S&P, the NASDAQ. And last night, I emphasized that and talked a little bit about the indecision in the price action yesterday. Obviously, a lot of volatility, wide price ranges, and a close on the S&P only 3 points lower than the open, discounting the gap open in the morning. But that often shows us indecision and is typically pretty significant when it occurs at a major level. And so that happened in yesterday's trading. And I talked a little bit about the levels and the lows from back in February. And that basically I'm watching for indication on the S&P that the 4,100 to 4,150 zone will hold through this week of earnings announcements, and in the context of this major sell-off that we've been in over the past month or so, after the rebound off that triple bottom. So we're now like in a quadruple bottom, which is interesting. And so my alert to our Zillion members was to watch this level. And if you see a rebound, and if you see this level hold and then rebound, to then look for a move up into the 4,300 level. So we'll emphasize that. But that was the commentary that was posted in Zillion last night that I wanted to highlight. And we basically did that one day. We traded up into the 4,300 level. So that all happened in one day, all today. But now we have a very significant support zone. So what we want to be watching, and this is, and again, very timely for today. We only have one trading day left in the week, of course, but this will most likely spill over into next week. So I think this will be really beneficial for you guys to navigate the market tomorrow and through the next week. And we will be holding our session again next Tuesday. Let me get my drawer.
It looks like things might be down a little bit because it's like Amazon posted like a $4 billion loss.
Yeah, I figured it was, big earnings week, and I figured it was a major earnings miss. So it was Amazon, you said?
Yeah, it's like $4 billion loss.
Which is, of course, like a small percentage for them, but
it's like what they spend on like toilet paper.
Right. Yeah. So, okay, that's good to know. I didn't have time to look at that, but I figured, futures are reacting as earnings related. Okay. So, here's this, it's kind of actually a triple zone just because of this low from back in mid-February. But, and then let me go ahead and just, while I have this, draw the resistance level that we hit today. All right, so let's see. Okay, so this is resistance around 4,300. We're looking at the S&P here. You can see that we breached that slightly today and closed below. Okay, so this is good. This gives us a good barometer for moving forward. We'll call the century market 4100 our real lower support for now. We didn't quite reach that back mid-February, but fairly close. Okay, so that's our more medium-term support. 4150, okay, has been our support more recently. So we've got these reversals off that close to that level. And then 4200 is support as well. Okay, and that held today. But 4300 is major resistance, and so we obviously came up there today. But if you look in terms of why it's major resistance, mid-September last year, but you can see these major areas of previous support that were broken and then turned into resistance. So this is going to be one to watch for tomorrow, and it looks like Amazon's earnings are going to put a damper on this rebound, but hard to say through a full day of trading tomorrow if that's going to that's how significantly that will impact the market. But 4300 and then 4200, of course, is these are kind of the 243, so 2 century marks, 100 years apart, right? 100 points apart, are the ones to watch very near term. And those were kind of the close to the high and low ranges for trading today. So big swing in the market, high volatility, very well-defined support and resistance. So how do we interpret that? What does it mean? Why is it significant? Well, if we, in terms of using this to make trading decisions moving forward, if we see a sustained break of the resistance at 4300, and that holds, then that's bullish. And then we're looking at higher levels of resistance. So I got one here just a little above 4350. So we're going to want to watch that if 4300 breaks tomorrow. You can see these previous levels of support. And then, of course, right there. So we got some strong levels of support at that level that are now going to serve as resistance if we break through 4300. Now, what may happen tomorrow because of the earnings from Amazon is we may stay in this range tomorrow. So I really want to watch and wait for the market to tell me what it's going to do based on this big week of earnings. So far, it's been a mix of bullish and bearish, right? But as long as this 4200 holds, and certainly if the 4300 breaks, then we've got more potential for upside move, and this range will hold because longer term we're in this wider range of 4650 to 4100. So we're kind of in the middle of this range, and always remember when we're in the middle of a range, things are a little bit trickier. So it's generally better, and that's why I posted the commentary last night to play as close as possible to the bottom of the range for long setups and at the top of the range for short setups. Those are going to give you your better risk reward profile opportunities, more opportunity for the trade to make a significant move up or down, and less likely to encounter multiple layers of support or resistance depending on which direction you're trading. So it may be a little tricky for now, but 4300, if that can break and hold, then will open the door, I think, for long opportunities. If tomorrow we're in this in this 4200 to 4300 range on the S&P, then it's premature, I think, to determine if we won't see another leg lower off this 4300 resistance. So we just kind of got to wait and see. But for now, 4,200 support, 4,300 resistance. It's kind of a tight 100-point range in the S&P to be working with, but you know, and truly this is a zone, a support zone, versus just a single price level between 4,150 shorter term and 4,200 to 4,100 medium term. So those are your major levels to watch in the S&P. And then, yeah, Chris, I see your question about a VIX ratio, backspread ratio. So we'll look at the VIX here too. Okay, so before we do that, let's look at the NASDAQ here real quick. And similar picture, very strong support at 13,000. And we've emphasized that on past live weekly sessions, and what a great, potentially a great buying zone this would be, kind of between the 13,000 to 13,200. And it, of course, the NASDAQ has found strong support there in the past and has so far this week done the same. And 13,000 being a millennial mark holds a lot of significance on its own as a price level, but also with the confluence of these major moves up off this level in the past, tells us there's a lot of demand around 13,000 to 13,200 from institutional buyers. So far that played out today. But again, we'll have to see how this last day of earnings this week impacts that tomorrow, because we do have some overhead resistance to keep an eye on. And it's a strong one because of what happened in the past. So in that sell-off that occurred at the start of the year, that's where the first real support was found. And then, you know, price has kind of played around with that level a little bit, but this is the one that we want to be watching for bullish sentiment. So it's right around like 13,700. The actual low from that day was 13,724. So quarter century mark, if we want to call it 13,725, or if we want to use the century mark at 13,700, that's appropriate too. But there's more upside potential for tomorrow and into next week, depending on, you know, the market's overall reaction to this week's earnings. But 13,000 remains a very strong, very, very strong support. And how do we use that information, and what's the significance moving forward? Well, if 13,000 were to break at some point, and it wasn't a false breakout, then that opens the door for big moves to the downside past 13,000. If it holds, then we're also in a range like on the S&P with the NASDAQ, and 15,200 is really the top of this range. So although we have, as I mentioned, some layers of resistance to get through to get it back up to 15,200, it's on the radar, you know, in terms of more of a medium to longer term range. And right around 14,300 is going to also be, if the move up off this 13,000 level continues, is going to be a major one to watch moving forward. You can see, and particularly here in early April, see this price consolidation right below that 14,300 level that ultimately ended up resulting in a bearish move down by over 1,000 points. That's significant. So that's going to be a lot of overhead resistance. There was more consolidation here too around that level. So if we get back up close to above 14,000 and then into that 14,300 level, any long positions should be highly aware of that level, and make sure that you're closely monitoring that for potential exits on any long positions. All right, and then let's go ahead and look at the VIX. So remember, we use the VIX in the context of the S&P, but because of the overlapping influence across major indices, it can also be used in the context of like the NASDAQ and other major indices like the Russell 2000. So what we want to look for in terms of reversals is the VIX hitting a resistance zone while the S&P or the NASDAQ is hitting a support zone. And that happened. And I was aware, had this on my radar, was aware of it, and was the reason behind the commentary I posted in our Zillion dashboard last night, because we have this 34 to 38 zone, which is major resistance on the VIX, and has been, we haven't gone above this zone slightly here in mid-January, but this has been the resistance zone for the past year. So when you see the VIX hitting this zone while the S&P is hitting a major support zone because they're inversely correlated, that's a great way to time a reversal. And you can see how well that worked out yesterday, right? I put that in the commentary and posted it yesterday before the reversal today in the market. So I was able to use that information and the analysis that I'm showing you here to accurately predict a move up in the markets today, a day before it happened. And let me see. So 28. The thing is, we have a support level too on the VIX that is previous resistance. So here's what I'm watching moving forward is this 28 level, 28 to 29. Because that, as you can see today, served as support because it was previously resistance. Today, we traded down. Now, indecision here. See how the open and the close are very close together. Usually when you see that, just like I mentioned on the S&P, near a support or resistance level, it lends more weight to that level because there's indecision between buyers and sellers, or in this case with the VIX, between fear and greed, if you want to call it that. And obviously, probably a lot of this is waiting for major earnings announcements from companies like Amazon to come in after the bell. But what we want to look for in conjunction with the analysis we just did on the NASDAQ and the S&P is for this 28 to 29 zone support on the VIX to break down to give us a better indication of whether the rebound off this major support zones on the major indices will continue. So that's how we're using these two tools in combination to give us good information about what to expect. So Chris asked what to look for to exit from the VIX back spread ratio. So Chris, it sounds like maybe you would put on a back spread ratio like we had talked about in previous live session, which is awesome because hopefully it worked out nicely for you, especially if it was off this buy signal, because we highly emphasize looking at buy signals from trade trend on the VIX below the 20 level as our kind of our timing indicator for initiating either a ratio back spread or buying calls or initiating some sort of protection or even directional speculation to the upside. Because you'll see when you see our green arrows, those are our warnings, below 20, they very, very often, with a high degree of reliability, end up in a VIX spike over the course of the next, in some cases, it could happen the next day and last for a couple days and be significant, or it could last for a couple months, like this one here from early January. before the market crashed in January, we got our VIX warning right there. There's the buy, and the VIX had its biggest spike up over the past year after that one. We're getting another one. So Chris, what I look for, whether it's a ratio back spread or buying calls or some sort of directional play on the VIX to hedge the portfolio or just purely take a speculative trade, is for the VIX to move up into a resistance zone. So one of those, of course, is that the 28 to 29 zone, which we've now surpassed. And we found more resistance up in this 34 to 38 zone. So we're in another zone now that, in my opinion, depending on, since I don't know all the details of your trade setup, where it was entered, what the option pricing was, what the expirations were, and so on and so forth, then, if you have a profitable position, these resistance zones can be good places to take profits on those. Because as you can see, as quickly as the VIX spikes up, it can also, reverse back down very quickly. So with any, long VIX position, whether it's a ratio back spread or calls or whatever, you do need to be very diligent in terms of profit taking to avoid, a quick reversal. But so far, the VIX is remaining elevated. It closed at just a tick under 30 today. And so, but I think, probably this is going to be the VIX spike for the near term. I would be surprised if it got back above the January level, right there. And I think probably the higher probability, just because we've reached such strong levels of support and on the indices, is a VIX retreat back down. So hopefully that helps answer your question. So, all right. So we're about halfway into our session. Let's go ahead and pause, see if there's any questions on the VIX or the NASDAQ or the S&P, and then we'll start our ticker roundtable.
All right, looks like Steven's kind of asking, since there is like a recent buy warning and confirmation on this VIX signal, would you kind of be a little less hesitant to keep that stop trail too far away? Would you kind of, since you're feeling like it's potentially going to bounce off the support level?
Yeah. So, good question, Stephen. And one thing that we talk a lot about in regard to the VIX, about the trade trend buy signals. I don't like the buy signals, even though, yeah, you'll find some that do occur above 20 that still make decent upside moves. What I'm really looking for, because you'll also see some that stall, like there was one, there was one. I want the buy signals at or below 20. So if the VIX is above 20 and the buy signal comes in, I think that either the majority of the moves already taken place, or it's just going to be more difficult to get a significant move on the VIX before it reverses. So like buy signals like this, our algorithm is what's the word? It's fractal. So it's like it's going to read the momentum the same on the VIX as it would the S&P. It's not, obviously security specific. So while this may be a great buy signal on another security, on the VIX, definitely not. So the higher the VIX level, and when a buy signal comes in, those should be ignored. So yeah, to emphasize, to really stay ahead of the game, we want to see these buy signals at or below 20. And that's where you're going to reliably see VIX spikes. Here's one that did not pan out. I only see one over the last year. So of all these I just highlighted, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12 buy notifications below 20. One of them didn't pan out. So 10 out, that's a really good, reliable strike rate. So I want to see those below 20, and generally ignore the ones that take place above the 20 level. And then, yeah, Chris, what I use the sell signals to on the VIX to short. I don't short the VIX, and of course you can't trade shares of the VIX, but I don't buy puts on the VIX when it's high, because you get volatility crush. It's the opposite. It's called, like if you look at VIX, the VIX options chain, you'll see what's referred to as a backwardation. So you're going to see further out, because the option, the market makers for the VIX know that the VIX is always going to come back down. So volatility is not going to stay elevated permanently. And so they're aware of that. So when you get a VIX spike, they know that it's going to come back down. And so if you go further out in expirations, you're going to find that the premium is actually backward of what you would expect on like an equity, because of that virtually near certainty that the VIX is going to come back down. So it doesn't work so well to buy puts on the VIX as it does to buy calls when there is more uncertainty about a VIX spike. Because when the VIX spikes, there's more reliability that's going to come back down quickly, versus when it's low, it could stay low for a long time, and there's less certainty about it spiking up. And that's kind of the reason why that works that way. So
Did you like sell calls at the top?
yeah. So I actually sell call spreads on the VIX a lot in my own personal trading account. So you could, if you have a big enough account, and yes, I do sell naked calls too, but it kind of depends on what the VIX level is, and more of a complex topic beyond the scope of our live sessions. But and just kind of a little teaser, we're considering putting out a volatility alert service sometime in the near future, possibly later this year, where it would be probably like a multi-strategy volatility service where we provide different types of option strategies on the VIX, like ratio back spreads, pair of calls, credit spreads, directional calls or debit spreads, all kinds of different strategies. But yeah, one of the things I do is sell call spreads, even at low levels, because I actually, if the VIX stays low, then I collect the credit, the premium. But if it spikes, then I use the long call option in the spread as a hedge, and I can take profits off the table when I see it hit resistance. And then, assuming I'm within my risk tolerance, I take that long option off the table and then keep the short option, and if necessary, roll it out, and then book profits on the way back down on the short call. And that's a little bit more of an advanced strategy and topic, but yeah, definitely. That's a core strategy that I use.
Sweet.
So yeah, any other questions before we start the?
No, we're good.
Okay, so guys, yeah, if you want to start putting in some tickers, it looks like a few might have already come in. I'm going to actually refresh our Zillion dashboard here to get today's data, and then we can start taking a look at some tickers.
So Stephen got to jump on it. You threw an MRK.
Okay, Merck.
Yep.
All right. Oh, do we not have data yet? Let's see. Okay, we're still waiting on our data, so I'll stick on our other chart here. All right, Merck. So Merck's obviously had a nice run up. So we're looking at a year's worth of data here on the daily chart. We've got we're in a zone of strong overhead resistance. So we're kind of near 52-week highs, which reside around 91.40. So got a buy signal today off of earnings, big move up in Merck, nearly 5%. So that's a good sign. So let's look at support and resistance. Very strong support down here around 82.50. Also around 84. So good news is there's a couple strong layers of support. We got this pretty much parabolic move on a nice buy signal down here in around the third week of February. Oh, let's get out of here. Sorry. Yeah, so overall bullish on Merck. Some good lower support, with the caveat that there is some resistance to keep an eye out on here. It looks like we kind of played around with that a little today on the high. Oops, it's not very straight. And again, more of a zone here. So watch this for any longs. I'd be watching this 89.50 to 91.50 zone. So maybe a bit premature to enter a long, or if one is entered on a break. Let's see, the trade trend algorithm has the suggested entry at 89.56 up here in the upper left. Let's see what the high was here on this 89.48. So we'd be above that. So on an aggressive position, potential break above the, at the suggested entry of 89.56, I may be more inclined if I were to take a trade off the signal to put it closer to like 89.60, 65. But not a lot of room to run until we hit this 52-week high from back in early November last year. It was either early November or late October. So a little bit of overhead resistance that may present a challenge. Now, let's zoom out real quick. Yeah, and so if we're look at 2 years, if we can get above this, so this is actually going back 2 years, a 2-year high. If we can get above that on this recent buy signal from today, that could be a nice setup. End up being a nice setup. Merck has just really been in a tight range. Here you can see like this 2-year range. It's really had a hard time breaking out. So, when you look at a longer term perspective, this is kind of a ranging play. But if you're patient and so one thing to emphasize here too, look at these buy signals off the bottom of this range. See, again, this is why we use support and resistance. These are the ones that would present nice opportunities. And then you see some sell signals off the top of the range. So, there's a lot of buys and sells in the middle zone. Wouldn't want to necessarily take those, even though some might work out. I always want to give myself the possibility of the biggest move. So I'd be looking for a break above the high of this zone that's been in place for quite some time, a couple of years at least, and use that as a new support level if it breaks, as buying opportunities for long setups. But yeah, interesting one to watch. Good one to share. Thank you. Next.
All right. Bill says, can you look at gold, GLD?
All right. Yeah, so gold's retreated, a bit after this parabolic move from mid to late January into early March. And you'll see what happened here. We hit this major resistance. Let's actually just go back to the 1 year. But very strong resistance up here. But we're now reaching a support level. We've actually reached it. More of a zone, I'm going to call it actually, because I'm watching this resistance area from back in early November. All right, so we've got a good zone to use as a measure of support right here. So although there's been a significant sell-off from around 186 down into 176 on GLD, we've hit this zone, which could present long opportunities, in my opinion, on a trade trend buy signal. There's actually still an open sell signal. So you'll see up here, sell stop was up at 181.12. So that came in here earlier in April. Entry would have been around here. And then you'll see that, let's zoom in here. There's an open sell signal with the trailing stop as of the close today, right above the high of this candle. So anyone that would have taken a trade off this short sell signal would have done nicely here on this recent downturning GLD. But what I want to be waiting for is for this to get stopped out off of this support zone that we just mapped out, and then look for a potential trade trend buy signal off of this support level. And if that occurs, then let's look at potential resistance that we might encounter on a long position, because we've got some significant resistance around 179. And then if we can get through that, we're looking at right around 182.50 or so to get up. But just in terms of an overall pattern and picture of what's happening here, not super bullish right now, just because of a lot of this price consolidation, choppiness, and some strong levels of resistance to get through. So I think the run up it's going to be hard to break up through some of these resistance zones, but might be good for a short-term play if we get a buy signal off this off the support zone we just looked at. But yeah, just overall currently open sell signal from trade trend and no current pending buy signals.
All right. Michelle wants to see who OLN. I think it's Olin.
Olin, yeah.
Yep.
Actually familiar with that one. So my dad used to actually work for this company back when we lived in the Bay Area.
Oh, really?
Yeah. Strong support and reversal day off of today's earnings release. Did that come in after hours or before market? Why is it not giving me my? It was after market. Let's see. So the analyst estimate was 233 and they hit at 248. So of course, always hard to tell how the market's going to react to that. Unfortunately, after market. So, but it looks like pre-earnings, there's been some bullish sentiment and reversal off this recent sell-off. So similar to the last one we looked at, where we have an open sell signal, trailing stop. So the entry was 56.45, just up here, and trailing stops now down at 53.84. So nice sell off of this run up into resistance. So now we want to be looking for buy, because there is strong support here that I'll draw out for you. And it's kind of, again, more of a zone, but beginning at 51 and then let's just call it 51, maybe not even so much of a zone. I was going to say 50, but the low today was not quite at 50. It was 50.27. But you'll see that why this is so significant. Look at the buying that occurred off this 51 level, at or near it, 51. You see a lot of moves up. And then when it was broken back in January, you saw a lot of resistance off of there that was finally broken again in early March. And remember, I think it was our last session, we really talked a lot about how to interpret and analyze support and resistance. So one of the things is, last time price was at that level, what did it do? So right now we're at that level. So the last time it made a move from 51 was back in late March. And what did it do? It made a huge move up from around 51 to 61. So 10 points off a 51 base. So, that's like a 20% move right there. Now, obviously, past results don't indicate future performance, but we want to be looking for, and especially in the context of these past demand points and buying off of this 51 level, we want to be looking for this to hold, and it certainly seems to be holding after these bullish. After these bullish reversal candles off that level. So this one could, potentially move up, but no buy signal as of now from trade trend. But I'd be looking at, we do have some resistance here to keep an eye out for around 54. If that can break, then we've got a lot more room to run. We could get up to closer to 56. And then from there, we've got 59 as resistance. So, these are often good options plays. I think Olin is an optionable stock. In fact, I think it has weekly options. Can be some good short-term option plays for things like, bull put credit spreads, put selling, depending on your options level approval and things like that. And I often like to use option strategies around these types of setups. So I don't have to be quite so precise or concerned with, overhead resistance. I'm more, focused on, will the support level hold? That's kind of the nice thing about options, is you can play those types of decisions without having to worry, quite as much about overhead resistance as you would if you, just went long the stock and bought shares of Olin. So yeah, that's a good one to look at. Very strong support there at 51.
It's like the last one I got is Snap, SNAP.
Okay. Actually going to go back over to our dashboard to see if we got our data refresh. All right, good thing came in. Let's look at Snap, because I want to look at the our gauges and sector performance too after we look at Snap. Ooh, interesting. So strong support right around, looks like maybe right around kind of the 2750. And a pending buy signal today. So previous pending buys near this level have resulted in nice moves up. So this can follow through. Let's see, the buy entry price, pending entry at 29.18. So we're looking at, I might set it a little higher up if I were to take a trade off this signal, closer to like maybe 29.20, 29.25. But if this follows through, I think it's got some room to run potentially if this ends up in a triggered buy signal, because we don't have a whole lot of resistance up until like 34. Maybe a little bit here around 30. But more importantly, we've got this really strong support area. So I definitely, want to wait for follow through, make sure it reaches the suggested entry, and then just keep an eye out for those overhead resistance levels. But yeah, that's a good one to look at. It's taken a big hit, obviously, so something to keep an eye on. Let's see, did they, I want to see what their earnings status is. So, okay, so they just reported back on the 21st. Yeah, I mean, the only thing is, as a name or a stock, I don't like it. I don't like, I mean, it's just gotten pummeled. Just within the last year was trading up above $80 a share, and now it's down at 26. It's just been hammered. So certainly as a buy and hold, I don't like it at all, but might be a play, off this base with the buy pending. So good one to look at.
All right. Looks like we got just PayPal.
Okay. Also a buy today. Cool. PayPal's gotten pummeled too this year. A lot of things have. Question is, do we have any real good support here? Yeah. Got to go back a ways. Going back to the sell-off of 2020. So back on March 23rd, it hit that low, which was 82.07. So 80.82, what was the low here yesterday? Here, zoom back in to make this easier. Oh, stay out because I want to show this. 82.12, almost on the dot, just 5 ticks off. Wow. Yeah, this is interesting. Could be a good buying opportunity. I mean, there's, again, in the context of the stock's just gotten killed. But if you go back to early 2020, was that Steven that suggested this one? Good eye on that. You found a major demand point going back a couple years, because these things can go back years and years. And then in the context of the buy here, if this one follows through, it could make a big run. Currently no divergence cloud, so it's out of the red cloud, but not in a green cloud. But look what happened last time the stock was down at this 80 level. It went up to around over 300 a share. Yeah, it took a while to get there, but with lots of buy and sell signals along the way. But yeah, this is an interesting one. One I'll probably actually keep an eye on. See if this. So the trade trend suggested entry buy pending is at 93.71. So I might keep an eye on this one. We're kind of at a resistance. So if it does trade up into the suggested entry, what's the high today? That can't be right. 93.18. Oh, sorry. 93.71. I think I said 83. Just confused myself. Yeah, so if we can get above that, up into that entry zone, might even place it above 94 if I were to take a long off this. Because then we're past this support over down here. Well past it. This could be a good opportunity. I'm going to keep an eye on this one. Thanks for pointing that out, Stephen. Yeah, so Stephen's asking on the individual stock symbols that we're looking at, how much credence do I give to the market indices that we talked about at the beginning of tonight's session? A lot. So even though, so that's what we do in these live weekly sessions is my whole process when I make trading decisions. So I always start from the top, and go down. So I start with the major indices, do my analysis. I'm doing exactly what I do on my own. And then I trickle down into individual names. If I'm looking at trading to stock or a futures contract or whatever, that's how I do it. And then I run the same analysis on the individual stock with the support and resistance, the trade trend, momentum buy or sell signals, everything. So in terms of the credence as it relates to the major indices, well, PayPal, may not be in an index that we're doing an analysis on because there's the indices are highly correlated. it's still good to know that if you're taking a long position on an individual stock, even if it's not in an index that we did the analysis on, and certainly if you're looking at like a tech stock, I think PayPal might be in a NASDAQ stock. But let's say it's a tech stock, then look at the NASDAQ, and it's just going to give you an additional edge if you're trading in the direction. So if the NASDAQ's moving up off support and you find a stock within the NASDAQ that's also moving up off support, then that's just going to give you more of an edge that you're trading in the right direction with the broader market. So yeah, good question, Stephen. And yes, definitely look at that. It's part of the whole process.
That's all I got.
Cool. All right. Well, great session, guys. Thanks so much. Couple things to wrap up here before we sign off. So if you guys weren't aware, we did our we just launched a brand new service. It's options on futures. And we held our summit on Tuesday this week at 1 p.m. Eastern. If you weren't able to attend, you can watch the recording. It's really great information on options on futures if you guys are interested in that. Richard just put the link in the chat box, so you can go ahead and watch that at your leisure. We just kicked that off this week, so it's a brand new. They're brand new alerts that we're sending out weekly. They go out every Monday night. So if you're interested in checking those out, you can click the link in the chat and watch the session that we did Tuesday. And if you have any questions, of course, you can email us support@altostrading.com. And we still are offering, let me get over here. Well, actually, I don't want to confuse you guys too much. We'll stick to that. Leave that for next week. So yeah, the link is there in the chat. Let us know if you have questions on that. You can also give us a call at 800-895-9348 if you have questions on that, if you want to put the phone number in the chat, Richard. And then one other thing too, I'm also accepting new clients into Altos Capital, our hedge fund. So if you are at all interested in investing in my hedge fund, you can also email us support@altostrading.com. Just let us know that you're interested, and we'll reach out to you with a prospectus and that information. But we are taking new capital into the fund in May. So if you are interested in investing in a hedge fund, we can answer all your questions, let you know past performance, and also some of the really cool things we're doing moving forward in the fund. All right, so I think that's it. Thanks everybody again. And we will see you on Tuesday. So it's Thursday now, so we'll actually see you instead of a whole week. We'll see you just in 4 or 5 days. So looking forward to seeing you guys next Tuesday. Have a great weekend and happy trading. We'll see you on Tuesday next week. Take care.